Hello, everybody, and welcome to the Plus Three Futures and Commodities show. On this week's show, well, we got the turn. It's something we've been talking about and trying to prepare you for. We got the turn. We saw a turn in NASDAQ. We saw a turn in S&P. We saw a turn in gold. We've got turns in commodities. Everything got thrown up in the air this week. Today's show, we're going to talk about, okay, what to do now. What next? What do odds favor is going to happen, and what are we going to be looking for to give us clues to prepare us for what's coming next. As always, I'm here with my partner Barry Hederachi. My name's Ben Maldonado, and Barry's here with us. Barry, big week. Had a big week. Looks like it's going to kick off a big second half of the year. Let's not waste any time because we got a lot to cover. Let's jump in and see what price action told us and what's most likely coming next.
Yeah, let's get right into it. We left you last week with the 5682, and we talked about the market, either being able to hold above it or not. If it fails, we talked about several timing points that sort of came in. And what that means is we were expecting the market to turn down, especially if we couldn't hold the price levels. In this case, 5682 basis the daily. And we were looking in our next support level, and we were joking about this, saying, how fast we could get down to the next level, right?
Right.
55.66, and we just about blew through it.
Yep.
And we held right about this little support area. Below that, like we say, so far so good. But what happens next? I think that was your question at the opening, right?
Yeah, I mean, we were sort of painting the story, painting the picture as to what the markets were telling us. And now we've gotten another chapter of the book written this week. So what is it telling you now? Where do we go from here? What's it telling you now?
Well, let's take a look at the daily first, and then we'll go on and look at the weekly. I think a lot of things will clear up by the time we get to the weekly chart for the S&P. Okay, this is the ES. I want to jump over to the cash index really quick. It's the cash. And here, I posted this earlier, coming off the October 22 low, we were up 270 degrees, and that level was 56.73.
What a beautiful tap, huh?
Beautiful tap. And we were looking for that. And S&P has been giving us some good numbers, over time, because, we caught this corner here. There was a little bit of a correction. And here's the next one, just basically based on price at this level, but we also had squares going into that. So, all right. So what happens? So if you notice, I don't know if you can see the gray lines on here.
Your eighths, yeah.
Yeah, can you see that? Okay, great.
Yeah, they're faint, but you can see them.
You can see them. So basically, we did a quarter of a square correction so far, and that's a line. And that also just happens to have a little bit of a floor because we were going sideways at this level on the way up. In Brook. So it's almost, in a textbook way, here's a breakout, and we came back to retest the breakout and look at it like that. That's one way to look at this quarter of the square.
Barry, also you were saying we got the price from a timing standpoint, not to toot my own horn or anything. The Rebel Yell cycle was on the 16th.
That just added to it, right? Everything
Perfect. Right?
Yeah, a lot of things lined up really well. Yeah, Rebel Yell cycle was there. And I think that really showed up in a lot of markets.
A lot.
And some of them got really good traction. All right, so that's that. Let's take a look at, I just want to talk about how the cash came right up into price, and that's good. We'll go with that. Yeah.
Beautiful.
And we'll get to the next step in a minute. I just wanted to show you guys what happened. Now here's the Dow, who's been, it's been sort of lagging, and all of a sudden the last few days woke up. Now the key with the Dow is I really want to see if we can hold above this 4350. I think this 4350 level is going to be really important going forward. Let me type it in here. There we go.
Right.
And this is a level to watch because that is exactly 45 degrees up from the low, April low. And I'm only focusing on that. We do have points coming from other levels, but I'm focusing on this because that's sort of where the last leg started, And
Right. You're isolating that leg in that swing.
exactly. And it will help us later as we move forward.
Mm-hmm.
So the thing for next week would be to see if the Dow can hold above 4350. And if it cannot, I think it's going to be sort of an early sign of a much, much bigger high being in place.
Mm-hmm.
Okay. So the recovery of this is important. Even if we dip for one day, next day we should be up. We should basically hold above this. So that's something to remember.
Mm-hmm.
We talked about the cash and we talked about the timing. We have it here and we also have it in the weekly. So we
Right.
might have to jump to the weekly really quick to get our bearings.
Because the 90 was super important there that we were talking about.
Yeah. So this is the 90-week cycle by 135 in price.
Mm-hmm.
And I like it. I think it just came in just perfectly. We gave it one extra bar last week, and I said, normally these are plus or minus one. I
I
think
mean,
the
that's
high
typical of the S&P, right? It always pushes a little bit in price and time.
always, man, always. And futures markets in general, they like to put about S&P, yeah. So what happens? And we kept talking about this really steep line and talking about how it just can't last forever, but it'll go on for a while. If you notice this one, look how many weeks we just
Mm-hmm.
ran up against that. So here's the second part. So the key here is, are we going to break like we did here? I mean, the last correction we had was in this box,
Mm-hmm.
say 1 to 3 weeks down, which is a typical correction for the S&P.
Mm-hmm.
So if this high is decent, we should get at least 3 weeks of a movement to the correction, a 3-week correction.
Mm-hmm.
If we don't, if somehow this support area holds, like we saw on the daily, and we bounce and somehow are able to take out 5672, clearly this cycle has run its course and that's it, and we have more to go, right? There's a much
Mm-hmm.
bigger cycle
Mm-hmm.
on the wings. But now we have to deal with what's happening in real time. And what's happening is we had a number of cycles expire last week and this week, and the market turned down perfectly on cue. That's what we have.
Yeah, and I think one of the
Mhm.
important things we'll talk about at the end of the show, because it's timely, is the cycles hit and the changes started happening, right? And I want to talk about those changes and things we look for when those cycle hits come in. So we'll use that as the end of the show topic to talk about that.
Yeah, and you had a sense of this early on because 2 or 3 weeks ago you started talking about, hey, how does the character change when the high
Yeah,
comes in? Do you remember
yeah,
that?
yes,
So if you
yep,
guys missed it, it's probably 3 episodes back, maybe four, because I remember Ben bringing up that topic, and we covered it for 2 or 3 weeks straight, right? Different
yeah.
aspects of what
But
happens when the trend changes.
yeah, today at the end we'll actually go over and look at the changes so you can sort of see them.
Yes, that's a good idea. Yep,
Yep.
very good. All right, so that's the weekly. That's what's happening. Now, there's another weekly I want to share with you guys.
There's your beautiful 30-minute. If you're day trading and you're not using this one, boy, you're missing out.
Yeah, I'll get to that soon as we finish the weekly one. Give me 1 second.
I love the circles.
Yeah, same. And this is the chart I wanted to share. I posted this once. Maybe we looked on Twitter, and maybe we talked about it once a while back. And this is a weekly chart. So as you
Mm-hmm.
can see, here's the 2020 low. We're going up. And I meddle with geometry here and there because when they line up with the actual other cycles, they look pretty good. And here we have some equilibrium lines based on the Gartley.
Mm-hmm.
And that's a pretty good tag at the upper line.
Yeah.
And the lines are good because you can see that 3-week pullback we talked about came right on an equilibrium line before.
And you had a little hesitation there at your XB on the way up.
Yes, that's right. That's right there.
Yep.
Little inside bar, and we broke out. Yeah. So the structure looks good. The weekly high, what's interesting is comes right around the election time.
Oh,
You
wow.
see that? Right?
Yeah.
So I don't know, it's too early to tell if we're going to correct in here and we're going to shoot up into that line
Right.
or not. But oh my God, if it does, it's going to be just classic.
Crazy,
Yeah,
crazy,
crazy.
crazy, crazy.
And it'll be great trading. For now, what I wanted to point out was, yeah, we didn't exactly touch it, as we did here. But it's awfully, awfully close. So we want to remember that. And as you trade, we want to know what came in at the high. So I'm just showing you guys a couple of things um, as evidence, right?
And that's a cash weekly chart, right?
Yes, this is the cash weekly chart. Yep.
Nice. Very
And see
nice.
how close we came. And
Hmm.
normally this is enough. This is close enough for the type of work, but it could be closer. I'm not completely signing out the fact that we could go up and tap it again, and
Hmm.
actually touch it. But we have this for now, and I think that's important. All right. So let's go back to
Super,
the,
super nice chart.
yeah, it's a very clean chart, and it's weekly, so it's like a very slow process to watch it grind through.
Hmm.
But every few weeks, it's good to take a look, see where we are. And I just wanted to show you this because these are very powerful lines. And if we actually have something, beginnings of something, it could be very good. It could be very
Hmm.
profitable because we'll know the direction to trade, and we can add that information to the rest of the stuff that we do. And then let's go back to the 30-minute chart that Ben mentioned earlier. So, yeah, we talked about this last week. We talked about, well, we've been retracing sort of where how we got to these places. 57.20 was a target we've had forever, and finally we tagged it. 56.29 was support. We came up into the same level as before, and this time a little bit chaotic. We had a triangle, tapped the upper part of the triangle, and we sold off. This time there was no real recovery, right? It
Hmm.
tried to bounce but failed. And after that, in the commentary, we talked about how if 56.29 fails this time and prices get stuck below, it's going to be a much bigger correction. So what happened? We dropped below 56.07, got stuck under that. This is what we mean by getting stuck. You guys can see this, right?
Hmm.
And it's really, I mean, I don't know how this works, honestly, even though I have the numbers, because we dropped below 56.29 and came back. Then, we stalled out at 56.18, dropped down again, 56.07, held the overnight movement, and we dropped again today and right into 55.39 zone. We didn't quite tap it, but that's what support, right? That's the support. So we might still go
Hmm.
back and test that area. Um, But the fact that we did a 180-degree move, that's a normal correction, at least for the 30-minute chart. So that would
Hmm.
be, I posted this earlier saying, hey, this is our support, meaning that's a good place to cover your week's profits. Why let it go?
Sure.
You know what I mean? Especially after a good week. So that's the 30-minute. So for next week, what do we do next week? Well, 55.39 just becomes a normal level to watch next week. If we break below that directly, remember, we could go 3 weeks down, so it could start the next level. And I remember talking about last week. Hey, do you remember us emphasizing how if last week's low gets taken out, that we could really go?
Yep. The
And
high and the low. You said we were watching the
Mhm.
high and the low.
Exactly. And so if everyone did that, if they were watching the low getting taken out, well, here we are. This is kind of how it panned out. High, we had a false break right into the resistance. We never settled above 57.20. You know what I mean? So that cancels
Hmm.
any long side, short side. Yeah, we took out the low. That kind of confirms the downturn.
I mean, I
All
hope
right,
people can appreciate looking at that chart, how well it defines price action.
little
And
too
how,
well.
and yeah, I mean, but that's the essence of the square, right? You're trying to define the places where you have an edge one way or another. Like when it goes up to the top of the square near 57.20, you knew if it couldn't get over there, you have an edge on the downside. When it
Exactly.
came down to the support at 56.29 and it couldn't get under it, you knew you
Hmm.
had an edge going up. But as
Hmm.
soon as it lost that, the edge flips to the downside.
Yes, exactly.
And it's a level
Exactly.
to level sort of grid that you can
Hmm.
use to map the price action.
Yes. Ideally, you're able to catch sections of the market, right? So
Hmm.
here's one leg, clean leg, and
Hmm.
here's the second leg. So you should be able to catch them, and they could be as small as 3/4 of a square, whatnot. But you can catch sections depending on how the market's moving, in that time frame. Anyway, So next week, 55.39 is a key level to watch, see if we can hold above it or not. If we cannot, we would expect a lot more lower prices, and I'll update all the levels for next week
And
on.
just to clarify too, Barry, remember he says you can catch a leg, maybe catch a full square. On this grid that he has, this chart, if you catch a full square, that's 90 points in the S&P. It's we're not talking about, eighths and quarters here.
Mhm.
That's 90 points.
Yeah,
So let's say you don't get the last eighth and the first eighth. Still what, 70 points?
yeah, yeah. We're not messing around.
No.
So they're good size trades, and the risk is very minimal using this type of a method. So, and also we have fuse lines that we post on Twitter. So if you guys follow that, you can minimize your risk even further on certain trades.
Mm-hmm.
All right. Anyway, moving back to the daily. So the plan next week is all right. So we have to cap this off with, we were looking for a high. This is sort of what we do with any kind of return. We were looking for a break. We got the break, and the break wasn't, 1,000 points below. We were looking for it at 56.82, very close to where the highs came in.
Yeah. Yep.
Now, in the bigger picture, now we're switching back to the daily. So on the daily basis, we're looking for some kind of a counter trend. And we always talk about this. If the market is weak, we're going to get a 1-day counter trend. We sell that, and it should be a very fast move.
Mm-hmm.
The number of counter trends normally determine sort of the speed of what follows. So 1 day means the market is very weak. 2 days, yes, it's weak. 3 days might be, yeah, it's weak, but maybe not as a 2 day. You know what I
That's
mean?
right. Not as
So it
big
sort
a
of
move.
tapers out as we
Right.
go. Yeah. But 1 day is the best because, if we get a 1 day counter trend and the next day the low of that gets taken out, everybody's piling on that. So that's the kind of trade you want to jump on.
It can be sort of think of it as like the amount of anxiety sellers have. They don't want to wait. They don't want to wait 1 day and they hit it again.
Absolutely. No, yeah,
Yeah.
everybody got the message right away. So,
Yeah.
so what we do next is we're on basis the daily. Now we looked at the 30-minute. You guys saw we had it all the way, almost actually from the high, because we couldn't settle above the high number resistance level. We had it from the high on the lower time frames. But on the daily, we want to sit and confirm a little bit better. So if you want to confirm this, we really want to see the counter trend, just like we did here, and we did here,
Mm-hmm.
and every high. Basically, we want to look at the quality of the counter trend. So let's see what we do. Are we going to hold above this and consolidate a while and then move higher, or are we going to move lower? Are we going to and if we consolidate for a while, it's not the same quality of the trade that move that you get from a 1 day counter trend. But that's all right. At least we know the direction. So
Mm-hmm.
for next week, we're going to be looking to see the quality of the counter trend. Basically, if we're going to get a 1 day, 2 day, 3 day sort of a counter trend is what we're looking for. But a bounce seems like it's in play, especially because we came into the 30-minute support. So we'll see. We'll see how it moves. Anything you want to add to that?
Yeah, just my notes from the daily from your January low.
Mm-hmm.
It's not a perfect square, but it's right in the ballpark of 135 by 135.
From here. Okay.
Yeah.
All right. Okay.
Yep.
Good.
Yep.
Well, yeah, we had a lot of squares coming up here. We had enough.
Yep.
The point is is that going to, is that pointing towards a bigger turn? Well, we have the weekly 90 square, so I'm thinking yes. And I know you had some things on the monthly when we looked at the monthly charts a while back.
Sure.
Um, anyway, the only other thing to watch is we had this 1 by 1 coming across, and we've already tapped it once. And I want to watch to see, and the 1 by 1 sort of will meet price next week, pretty much where the
Where
support,
support is. Yeah.
yeah, that band is, and that ends up being about 5,500. Nice round number,
Mm-hmm.
not too far. So let's watch for that. So 55 could be a potential bounce point, other than where it is now.
Mm-hmm.
And everything else, I'm going to defer back to the 30-minute, and we'll take it from there. And I think that's it for the S&P. for me,
The only thing I'd
uh-huh,
add for your weekly, Barry, if you pull the weekly up, we
hmm
did get an outside reversal down this week.
that's right. Which, yeah, and you text me that too, right?
Yeah.
Yeah.
Yep. Yeah.
So that's a big deal,
We
which
poked
just
up, made
adds
a
more
high,
to
and then
that's just
yeah,
more fuel.
yeah, that's right. It adds to the significance of the high. We'll see
hmm
if we get follow through, but we do have the outside reversal down.
That's right. And that's kind of a big deal.
Hmm.
So, and we had an outside reversal here. You see this bar
Yep.
on that was a week of what, January 7th, 2022. And not saying this is the pattern, but you see what that led to,
Right.
right?
Yeah, and
But
that's why
they
you
do.
pay
I mean,
attention, right?
yeah,
You pay
yeah,
attention because it can do that. It can lead to that.
absolutely. And but not only that, it does it often
Yeah,
enough where it pays to watch for those things
sure.
and along with other things. So yeah, that's it for the S&P. And if you guys like our work, please click the likes and subscribe and hit the bell for notifications when we upload. Because we don't really, it's over Saturday sometime, usually in the morning, sometimes in the evening. Depends on how much free time we have to get this done.
Right, right.
Anyway, you get a lot of you guys responded really nicely. So thank you for all the likes.
Yep.
Let's move on to bonds. What's happening?
Sideways continues.
Oh boy, talk about fourth wave action, right?
Oh,
So
but it
19,
does, Barry, it
yeah,
does fit with this market, and a lot of other markets like crude are just in big ass triangles.
yeah, true. And yeah, it's just how it's going.
Hmm.
So bonds sideways, 1916 is a balance point. It's sort of the balance point level. If we can settle above it, we can see, bonds have a chance to take a shot at 124. Otherwise, we're stuck in this grid between the 1916 and 50% of the square, which we held. So that would be
Hmm.
like between 16 and 19 and a half is sort of the range.
Right.
So that's it for bonds, not much. And we'll look at the weekly bonds here. Let's just jump to that now. So here we have what happened. I wasn't sure if we were going to break out of this little triangle or not, but looks like we
Hmm.
tried to push above it, didn't quite do it. And I'm not very convinced of a breakout because
Right.
it's not the kind of fuel that you see,
It's not robust.
No, not enough. So, but if I draw the triangle from this high,
Yep.
you can see it didn't quite take it, right? But I
No.
skipped one and it took it from here,
Right.
which I had drawn to contain that one. So I think I'll move it. And this is a legit triangle.
That's a
So
good one. Yeah.
yeah, so I'll just redraw it from the high in 23 and didn't quite do it, but really pressed against it. So I feel like this triangle is still in the works
Yeah.
and let it compress and break to the downside at some point.
Yeah. Yep.
No bias here. All right, next. um, okay, crude.
Speak of triangles.
Yeah, speaking of triangles and driving people crazy. So look, I don't know if you guys can visualize it, but there is a bigger box here between 73.50 and 83. And a lot of the action is happening in between that. This is,
It,
when Ben's talking about going sideways, this is it, right, Ben?
yeah. No, but this has been your box for a long time.
Yeah, we've had this box in here for a while and
Yep.
it paid off. We got it all, we detected it early on and it's been good.
Hmm.
So where are we now? Well, we talked about how 73.50 held and then we were expecting to move higher, got into 83. Sure enough,
Stalled out.
seller, yeah, stalled out, seller stepped in. So we're within the box. And now we got to 83, couldn't quite break out. And now we're rolling over. And 96.50, I dropped in last week saying that if we can hold above it, which would be these highs
Hmm.
and this flooring here, oil crude to be in a good strong place to consolidate and move higher. It'd be very bullish. And if we took it out, I think I said, we're in for a little bit longer consolidation. And I think that's the case. Could we get down to 73 and a half? Yes, we could. So you can, as long as we're below 79 and a half, you could potentially trade and take the short trades if your system works with that. Otherwise, I think the short side is a little bit dangerous these days for crude. So we'll leave it at that. That's kind of what I have. Do you have
This
anything to
this
add?
yeah, just this might be the effect of, we were at the top of the box and now drill baby drill is coming out and
Hmm.
they're gonna a new administration's gonna open up supply and so we're just gonna drift down to the bottom of the box and
Hmm.
but until we break the box, there's really nothing to do unless you want to trade the range.
Yeah, the range, yeah, from the corners, you can catch two corners and trade in between.
Hmm.
Other than that, yeah, let's just wait because we're smack in the middle of that entire consolidation range. So not
Yep.
much to do.
Nope.
All right, let's take a look at the weekly. We are, well, here's our weekly triangle.
There you go. It's perfect.
Perfect. Went to the high, tapped it again. Now we're headed towards 73. There you
Yep.
go. Just
Yep.
happened to be right there. Okay.
Yeah. That's a
Um,
great visual of the box and the triangle right there in one.
right?
Yeah.
Yeah. I don't know what else to say because look at the time we've been spending sort of coiling. And and I can tell you one thing though, this kind of coiling is going to lead to moves like this. So
Big, big
I
move.
think it's coming. We just have to be super patient
Hmm.
and pick and choose these as they show up
That,
correctly.
that's right.
Hmm. All right, let's move on to gold.
That's a significant high, isn't it?
It's a significant high, but it also is sort of ringing to me sort of a false break,
False break. Exactly.
big, especially if we follow through to the downside next week, even one day, and we get stuck below the 144. I'm
Hmm.
thinking this is a false break. But let's see. It's a little early to call it. And the reason is we've been very bullish on gold. We had the triangle break, so it's also keep in mind it's also normal for a triangle to break and come back for a test of the breakout range, right? So we
Right.
could be doing that. So we could come down into this range when you get the pricing around 23.78, 75,
Hmm.
and then continue to rally. So we'll see. But anytime we break out and we reverse right away, I'm a little
You
bit
got to be
cautious.
wary. Yeah.
Yeah, yeah.
You
But
also
over
got a potential three drives there too.
potential three drives. Yeah. So a lot of things happening. Um, but let's look at the weekly. I think the weekly gold. I think the weekly is what really holds the key.
Yeah, I mean, look, I wouldn't be looking to sell your gold. I just wouldn't be looking to jump in here.
Jump in
That's
here and try to manage risk up here. Yeah,
yeah. It's a little tougher with the evidence that's starting to
yeah,
come.
yeah. Your chances to get in were around here, coming off of here, right? We had other
And then
points.
if we did make a high, let's see where the correction comes here, and then we can get in again.
Mhm,
You
exactly.
know,
Yep.
because it still
And
looks bullish long term. I mean, look at that. Look at where we are.
yeah, this is coming back from 99 low, right?
Hmm.
And look at this. So, and the reason I opened it up was for you guys to see we're up 270 degrees, and that's where we stalled out. And you can see when we got up to 180, we
Stalled
stalled
out.
stalled for a long time, sort of distribution almost, and then we sold off, put in a multi-year bottom. Where did we put that multi-year bottom? Right on top of the highs that we had at 90.
Hmm.
90 over here, oh 08, 09. So we were right on top of that. And then these lows came on top of the 180. So now we're basically putting in another floor for eventual highs that would use this as support if gold is to have value and continue to move higher, right?
Right.
So I think for now, since we had a couple of good legs, we might be in for a little bit of a consolidation around this level, but we're
Hmm.
also watching to see if we settle above 270 degrees up. And if it does, then I think we have a lot more to go. I think it could really wake up and move. For now, I
Sure.
would till we settle above, I would really be cautious and about going long, because we could correct down to 2250 without any problem.
Also on your weekly, we got the 90 weeks, so that's significant.
Yeah, we got to, yeah, that's all in play for sure.
Hmm.
All right, let's go look at somebody that really got weak need
Copper.
and copper. Yeah. So last week we talked about the 50% of the square, meaning, holding above it would be healthier and slipping below might signal another retest of the low that we put in, which was pretty textbook considering the highs that we had on the
Yeah,
same
right
level,
on support. Yep.
right? So I guess it was a little bit too textbook. We came back to wipe it out, shake out right? I mean, look at that. Just perfect. And the signal is you would have gotten it first if you knew the 50% line was 453. Taking that out wouldn't be good at this stage, especially
And
if we try.
and Barry, in May, we talked about it. We said that's a square out that you got to be careful. That high is significant. It's a square out.
That's
Now
right.
we still thought, because price action was telling us that the pullback was going to be bullish, but we said that high was, we had I think it was a 216 by a 216, if I'm not
That's
mistaken.
right. On the weekly. Yes.
Yeah, that's a big high.
hmm Yeah, we
Anyway,
did talk about that. That's right. God, we forget so many of the things we call out. Swear to God.
yeah, yeah,
We need a
a
call out
scorekeeper,
moderator.
a
Yeah,
scorekeeper we
scorekeeper.
need.
Exactly.
Right.
So that's exactly right. So coming back to the daily, now that we lost that level, this 3/4 level at the square, clearly the 60 degree is where it's going to go. So that's really around 406, 405, 406, 405 was the level we were using earlier. So it looks like we can get down into there. And well, let's just wait
Yep.
and just keep focusing on that in that direction. So here's the weekly.
There's the
We
square.
there's square 216 exactly by
Remember, we were talking
216.
about, well, it didn't quite get there, but when you're talking about big picture like that, that's good.
Yes, yep. And we talked about how this is a continuation chart, and if you adjust for premium, that gets a little bit closer up
Yep.
here. So yeah, now I remember. So anyway, we're basically weekly, we're perfectly at 144,
It's do or
and
die.
it's do or die, baby. So I think this is really the level I mean, we could go a little bit, maybe 420 would be okay.
Right.
But anything further, like we talked about on the daily, if you get down to the 405, it's still okay because it really doesn't. I mean, it would be bearish if we take out like 364. So I'd say copper's at a critical level as we close up the week.
Yeah. No, I mean, that 144 is key.
Yeah, 144 is a key level,
Yep. On
and
the weekly.
because of the premium and the rollover and all of that, we could. I mean, that is the exact level, but we could go up and down a little bit,
Yeah.
above or below.
You know what, Barry? This is a great example of the technique you've been sharing. The look at the inside bar, you take out the higher low. Look at what happened.
I should zoom into that. That's
Yeah,
worthy.
make it wider. This is a really good lesson right here.
Yeah.
Make it
So
wider.
wider. Okay.
Yeah. And then you can show.
There we go. So there's the
Yeah.
inside week right there.
Yep.
And I think we might have mentioned it last week. Well, we do every time we get
Yeah.
a chance.
Right.
But here's the low of the week getting taken out, and it had the resulting move coming
A
off of that.
huge move.
Very, very big. So yeah, inside bars you always have to pay attention. I mean, if you just trade that along with something else, you have a huge edge. I mean, here's a little triangle on the basis daily, but look at this inside bar. What happened after you took it out?
Yeah.
That you can see that, right? Like a little tiny compressed bar,
Yeah.
and boom, started the entire move up.
But it's a
So
good example of, just don't get bored, because the inside bar means, it's going sideways, or it's triangulating, it's boring, it's
hmm
stupid,
hmm
it's frustrating. You fill in all the adjectives, but there's what can happen when you catch it,
yeah. So there's
when you
one,
when
and
you're
look at
paying
this.
attention.
Here's another one.
Yeah.
And you
Copper
see what
loves
happened.
those.
Yeah. After that, look at this entire move came off of that, letting go of
Mhm.
that. Anyway, so that's it for copper. Let's move on and wrap up with the currencies. There's a dollar. Really pushed that level, didn't it? We drew this line up.
Yeah. It's another major market that's chopping,
Yeah.
bonds, the dollar,
Mhm.
crude.
Yes. And I remember saying last week, I wouldn't, a little break below that and a reverse false break wouldn't be out of the question. And
Yes,
that's pretty
indeed.
much what we had, right? Yesterday
Yeah.
came down, today we flipped. So yeah, we're stuck in the range, all right. And I think the expected target would be 104, let's say 105 to the upside. Let's see what happens. we can get above that, we have another shot at the 50%, which would be the 106 level. And so up until then, up until we at least can settle about the 105, there's not much to say. But this false break kind of signals, it's potentially we could have a bigger move this time because of the false break. So let's see how that plays out. It's very good as far as false breaks go.
Yep.
Especially because we had followed through today. And let's take a look at the weekly and see what the weekly is showing us. So weekly, we have this huge triangle, and I'm wondering even if this is a narrow one, but I think it's a little bit too steep. This is more of a better triangle overall. And we're smack in the middle of it. If this is the middle, we're right in the middle of it. So not much to say other than, yeah, you're right. Dollar's just in a whole bunch of chop. But if you want to trade the range, we boxed up the range on the daily. So I think that's the way to play that. And let's move on to euro. So 108 was our key level. We settled above that. Next target above that was around the 1095, 109 area. We more or less got to that, reversed. So long as the dollar is going sideways where it is, below the 105 level, I would say I would look at this line. And I wouldn't, euro could certainly be in this range bound, just like we were back May. Until we get below 108, I think, we have to leave it alone. I really don't see a big rally in euro at this point. So it's just, you have to really be careful in going long, but the short side will show up either off of here, and especially below 108, it should be faster downsides.
From a macro perspective, bonds are stuck in a range. The currencies are stuck in a range.
Stuck in a range, yeah.
Yeah.
You want to get trapped in a range.
Let them break, and then they'll run. They'll run hard.
And this is a great example of that range, tightening range. So we're in a much better looking triangle in the euro than the dollar. Again, so we came up to the upper range of the triangle. Now, we have plenty of space. The lower range will be around 106.8, 106.5. So again, we're still about 108, which just happens to be middle of the triangle. And we'll just continue to play it that way. Not much else to do. Let's get back to the daily and finish up with our favorites.
Natty's at an interesting spot, isn't it?
Yeah. I think we came back to test the breakout level. That's the old highs, back in February, and it looks like some buying came in. So let's see. We'll have to continue to watch. This is the correction. We were a little bit below the 8 line would come in right about in there. So let's just say it's not strong. It's just kind of hammering out the low. I think it's still the same process we started in early 23. We're still hammering out the same kind of a low. And I'll tell you though, the longer the lows get hammered out, the bigger the moves coming out of them.
No question.
So yeah, so I think definitely don't fall asleep, and we'll watch it every week to see what's happening. It looks like we reached some kind of support level. If you look back to the early 23, these lows were exactly the same area, right? So
yeah, I wasn't going to talk about it today just because we haven't reversed on the daily yet. It could happen next week, so keep an eye on it.
Yep. Moving
but
on,
we are on good support, no question.
Yeah. And moving on to the Hang Seng, this was a 72 by 72. Or no, it was 72 by 36. Sorry.
Yeah.
So no, 36 by 36, half a square. We bounced off of it. Looks like we have a higher low. We have an outside reversal, something to watch. And long as we're above that square, long as we're above that low, I think Hang Seng's in pretty good shape. And we could continue to go back and test this 19,450 level. But before we do that, we got to get above the 18,054 level. And let's see how it does it. But for now, it's in pretty good shape because of that 36 by 36 squaring out at this low. So this looks like a low, and that is potentially a higher low. But as I said, long as this low, the square out low is in place, in good shape, it's like the correction's done. And that's all I got. I think that wraps up the Wraps up today's show, Ben.
That's good coverage. Very, very good.
All right.
So
Thanks.
on the commodity side,
Mm,
we're going to go over NQs, Bitcoin, and then the only commodity I have to talk about is coffee because we saw pretty significant selling in the commodity complex last
mhm,
part of the week. The grains got sold, the softs got sold, the metals, as you reviewed gold and copper, you throw silver in there, they all got sold.
mm.
Um, Crude came off its highs. Nat gas is trying to hammer out a bottom. So there's not a lot to do there, but we will cover coffee in addition to the NQs and Bitcoin. So let me share my screen
All right.
here.
Let me put it back to you.
Okay.
So almost a full square move. We have support at the 50% level of the NASDAQ.
Yeah, that's exactly right. So
Mhm,
the key things I wanted to point out here, we made the high, we came down, tested the full square, which was, not only 180 up, but structural support,
mhm,
had one up bar and then straight down again. There's an example where you were talking about, get the counter trend. It's one bar here,
mhm,
and then we reversed right away. But we did find support on the half square. You can see the one by one from April. Maybe we're going to come down and test that. The other thing I wanted to point out is we are 185 solar degrees low to high, which is basically 180, 6 months
mhm,
from that January low. The high looks good. Now we have to see, what do we get off of this? When we come back up, do we get stuck under this full square?
mhm,
And the full square is let's see where the full square is. For NQs, it's like 20,395. So for me, that's the 180. That's a big number. If we get above that, we can push and make another high. If we get stuck below it, that's kind of the fat pitch we look for.
mhm.
So we'll watch the counter trends this coming week, and see what they look like. We
Sounds
did,
good.
low to low, we did just about 30. I think it's 29 days low to high from
Mhm,
that June low. If we push a 90 from the April low, it takes us to the end of August. So let's see what we get.
yeah.
Anything to add here on the daily?
No, it's sort of mimicking the S&P pattern. I see the one by one right below.
Hmm.
And yeah, let's watch the counter trend to see how it goes.
Yeah, we have to see,
Yeah.
where the counter trends fail in
Mhm.
the coming week. All right, let's jump over to the weekly. Speaking of circles,
Yep, there you go.
so here's
Taking it
here's
on
your
time.
yeah, here's your one by one weekly. And look what, again, we look at these circles to catch the fast moves, right, along the
Hmm.
curve,
Hmm.
or if we break out, a potential fast moves in the opposite direction once it comes out of the circle.
Yeah.
So we got a couple things to look for. We're getting the fast move here. We're below the half square. Is the one by one going to hold on a pullback?
Mm.
Next week, that's around, call it 19,000.
Right.
So we want to watch that level. But, here's that 90 weeks, like, off by one.
Yeah. Pretty
That's
good.
significant. It's
Looks very
significant.
good. Yeah.
Yeah.
And he's on a square line.
Hmm.
You have the timing in place.
So we're going to see how it plays out. This is the things we've been talking about from a timing and a cyclical standpoint. And now, price action is giving us clues as to what is the effect of that cycle. And right
Mm.
now it looks significant.
Yeah.
So,
Good.
and
Yeah.
and we'll get more clues next week.
Hmm.
All right, let's jump over to the monthly. Just about made it to the half square.
Yeah.
So this
Close
this
enough.
is yeah, this is vibrating nicely. Timing wise, high to high, we did 32 months.
Hmm.
Um, Low to high from the October 22 lows. We did 21 months,
Hmm.
which is close to a 22. Um, We did 52 months from the COVID lows.
Right.
So again, that's a significant number, and 101 months from the last time Trump was involved in an election in 2016.
Mm.
So again, there's timing there. We call that a hit for price. The monthly bar hasn't printed yet, but we're flirting with the lows with what about 8, 10 days left, trading days left in the month.
Mhm. Yeah. Yeah.
So we'll see how the monthly plays out. Anything else to add here on the monthly or the weekly?
No, no, I think your levels are pretty clearly marked, and I like the
Mhm.
support level that's coming up.
Right.
Let's see how it pans out.
I'll
We're
show
just
you.
getting started, so.
Yeah, I'll show you one here that's kind of nice. The calendar day.
Mhm.
This was interesting in that we made the high. Look where the pullback went, like right to support both structural and from the 288, and then we had the counter trend, and then boom, straight back down.
Mm.
So it's weak. We're going to be focused this week on counter trends. What do they do? How many do we get? And then based on that, we'll know what odds favor is going to come next. Whether it's another fast leg down, or are we going to chop around, or are we going to turn tail and rally up, and try and threaten the highs? We'll see.
Mm.
Let's jump over to
That's good.
Bitcoin. Bitcoin really acted well, given this wedge that we have here. I mean, look, we talked about when it hit here, how we had both support on this wedge and structural support, with a little air to boot
Mhm.
from this area here, the hashed area that we had marked off. And then look at the rally coming out of here.
Yeah, that was a good call, man.
Yeah, the next big
Mhm.
thing is going to be this half square and the top of this channel.
Mhm.
The half square is right around 68,000. It's 67,850.
Mhm.
So we're not far from there. That's the half square. And then if you extend it up to the channel, you're talking about 68.5. So in that range, from roughly 68,000 to 68.5, if we can get out of there and escape the channel, then this thing could run further and go back up to this 73, 74,000 high that we made in March.
Okay.
But this is where you want to buy. You buy near the support when it holds and turns, and we got the turn. Look at the monthly. The monthly looks really, really fascinating.
Mm.
I mean, it's basically this month we've gone the whole half square, right? We tapped the bottom and now we're tapping the top of the half square.
Right. Right.
So if we can get a
Very
monthly
nice.
close over that, that'll be very bullish, because it'll
Mhm.
open up potentially the full square, which is, call it 81,000.
Mhm.
If we get stuck below, maybe we're going to be chopping around some more in this channel,
Yeah.
but we'll see. Definitely bullish reaction off of support. If you look big picture, this whole consolidation is right at the previous all-time highs, which is not a
Mhm.
bearish thing.
Right.
So Bitcoin looks bullish. All right, commodities. I gave you the brief overview. Let's jump right into coffee and see what coffee's doing. Nice low today, huh?
Perfectly online.
Uh,
Good recheck. Good check back.
yeah, it's a nice check back. So we alerted people to coffee a couple of weeks ago because this triangle was beginning to tighten up. It was forming really well, and we said, hey, doesn't have to make it all the way to the end. Got to keep watching it because we could get the breakout. Well, we got the breakout last week when I was away and Barry was away, and now we've been consolidating. Much like gold did, much like some of these other charts have done. It's consolidating after the breakout on top of the previous high, and that's
Mm.
bullish, right? By
Mm.
definition, that's structurally bullish. But look at the clean out move they did today, right? Whipped it down below the full square, tested the triangle, the top of the triangle, and this, by the way, is a one by one
Mm.
that it just happened to tap as well. So we got a weekly close on the daily basis. We closed the week above this full square, and that's key. The full
Mm-hmm.
square here is, call it 237. So this is 237.
Mm-hmm.
As long as we close above, which we did, as long as we stay above this 237, we should be in shape to get up to the 260s up here. That's what it is. The half square is 260. So that will be our next target. So the daily is, as you can see, it's kind of stair stepping. Here we had a
Mm-hmm.
triangle, broke out, came back and tested it, pushed up to the next level, triangle, broke out, come back and testing it. It appears to me there's going to be some issues with supply, which is why we're kind of stair stepping higher. But we'll
Mm-hmm.
see. We'll see what the news is.
Yeah.
Let's move over to the weekly. You can see why we're struggling a little bit up here.
Yep.
This is a 1x2. This is a 1x1. So we're holding the 1x2, which is, as you know, is a very steep thing. We got below it here when we were in the triangle, a couple bars here, a couple weeks below, but now we're back above it. The key level weekly basis is, call it 247. So we need
Mm-hmm.
to get above 247, get a close and clear a bar above 247, and then it's off to the races. That would
Right.
open up, 273, which would be the half square.
Mm-hmm.
So we watch to see. It wouldn't be surprising if this thing contracts some more under here to build up energy and then goes again. This little triangle broke. Maybe it forms another. We had an inside week, so the old technique, watch the high, watch the low of that inside bar to give you a clue which way we're going to go. All right, let's jump on to the monthly. Same story,
Mm-hmm.
banging its head up on the ceiling. Here it's about 252. So we need to see a monthly bar clear 252 to sort of, get the all clear to keep going higher.
Mm-hmm.
We do have a monthly up bar now. We were inside for 2 months. There's your clue, Barry, right? Inside bar, took out the high. Now we're well above the high of that inside bar.
Right.
So coffee again is the only, in my opinion, the only actionable commodity right now on the bullish side. The others, the grains trying to hammer out a bottom. The softs, other than coffee, we're getting hit or triangulating. The metals, as we talked about, are correcting. Crude hit the top of its range. It's coming back. Nat gas, we just reviewed, which is testing a bottom there. So
Mm-hmm.
not much else in commodity land to talk about. The subject I wanted to talk about and wanted to look at examples, if you have them, is now that we've gotten in some major markets like the S&P and the NASDAQ, we have a confirmed high.
Mm-hmm.
How do you make the switch? What do you start looking for? What's the evidence? Because the last 2 or 3 weeks we've been talking about, okay, there's 90s coming up, there's cycles coming up, there's a rebel yell hit. There are things timing wise that say a new cycle, one cycle's ending, a new cycle starting. Let's look at the examples of things that since that 90 came in a week and a half ago or so, what's the price action that you've noticed? And we can do the S&P, we can do copper, we can do
Mm-hmm.
whichever market you want, Barry.
Mm-hmm.
Let's show them the markers that you're looking at from price action to say, okay, this is telling me this about the cycle, or this is telling me this about, the effect of that cycle in this market.
So we can look at the daily. I mean, the S&P is a good one. We can
Mm-hmm.
look at this. Well, basically, you want to look at you. I want to see weakness, and I want to see price trading below levels that we use. Key levels. So in the S&P, the example would be 5682. We want to see price trading below that,
And so like
and
a full bar below 5682, right?
yeah, I want to see it trading below. Like this is, and like by the time we closed on the 17th, that's pretty good. Mainly because we took out 3 days of price action or 2 days of
Mm-hmm.
price action. So that's
Mm-hmm.
a fairly good reversal. Another thing would be to have it hit your price precisely and it's basically just break away like we did in the cash.
And then, in other words, take out the low of that high bar.
Well, that's sort of our basic reversal pattern, right? We want to see the low of the high of the low bar getting taken out. That's sort of a quick early confirmation. Would you call it that, Ben? Yeah, early, right? Early
Then, in other words,
confirmation.
that's an indication of some sort, something has changed.
Yes, because that doesn't happen often if the market is trending. That's
Hmm.
just that's just kind of how it works. So if you watch for that, that's one indication. Well, basically, you want to see prices going into the level. So here we can look at how it works. We ran up into it and we stalled. You can see 1, 2, 3, 4, 5, almost 6 days of really not being able to push higher. Then all of a sudden we have a break to the downside, and that's pretty much of a textbook turn down. Now, what's different? What's different is sort of the veracity of that move, and the second is, we can switch to the intraday timing, like the 30-minute chart, and get a little bit more clarity around how the price action changes.
Hmm.
But now we're just really getting started on the downturn. So we had the first turn. Now we talked about earlier how we're looking for the first counter trend.
Hmm.
So in terms of that, it's not here in place yet. But if you were to go back in history, we had a false break here. We reversed outside bar,
Hmm.
and then this bar was the counter trend. It came up to 53.10, this red dotted line, and
Hmm.
it reversed. And from there, it moved lower. Um, we can look at with outside reversal there. We we had we had we could here's the inside bar got taken out. This move was only 1 day down, but was 1 day down
Hmm.
and didn't quite. We weren't able to take out the support that we had, so that's that. So basically, we're looking for change in price action. Do you always get really nice, clean counter trends? No, but they do come. So in this case, we sort of had a one of that slow march type of patterns where slowly we're grinding down very
Hmm.
slowly. All of a sudden, we have this fast move right into support, and then we had 3 sections back up into resistance, and that was our technically that would be sort of the first counter trend swing, not the bar. Here we had outside day. Next day we had an inside bar, and inside lower the inside bar got taken out. So that's another indication. So you're looking for any kind of a pattern that shows up around corners. And we just talked about a few of them, and they happen very often. And in this case, we're looking for the same idea. We want to see a counter trend. And normally, if the markets are weak, counter trends they come in very fast. Um, and you're looking to catch the reversal. So I think if you look at the 30-minute, it might be okay. So here you can see going into it how the price action really changed. Before,
Hmm.
we wouldn't have these kind of wild, crazy swings.
Hmm.
Remember those big swings? Everybody's getting
Yeah,
dizzy,
yeah, yeah, yeah.
right? You wouldn't have that. You would just have normal corrections, like a normal bull market price action. So here you can see the volatility sort of increase. It's almost like distribution in a way.
Hmm.
That kind of a pattern, volatility increased, then really coiled up. So after breaking a triangle like this, we should really take off, and we couldn't. We ran right up into resistance. And what happened as soon as we tapped that? It was just really price action contracted, volatility just dropped, and prices slowly. Here's another slow march type of a move. You see how that slowly, at first
Rolls
slowly, and
over.
then all of a
Right.
sudden quick, right? Very
Yeah.
fast. And you'll see, so you won't see patterns like this in normal bull market. And so you're looking for those things. You want to. The other thing I look for to see, I'm looking to see if prices can hold above or below, levels that we post, levels that
The
we
key
use,
levels. Yeah.
key levels. Yeah, we want to, in a bull market, key levels are always held as long as the markets are strong. Now here, the fact that we couldn't hold it here, we held all through here,
Hmm.
and then the counter trend failed. That's definitely a tell. When that goes, then we get lower highs. That goes. So I'm looking. I guess nobody's really asked me this question. So now that I'm sort of talking it out, speaking it out, it's a combination of price action and price
Hmm.
levels that you're looking for, and you want to look at the price levels as an overlay, like a template, and you want to see kind of like how we use squares, and you want to
Right.
see how the price action is behaving within that. Uh,
So it's
like,
almost like it's almost even to the basic, the bars is one thing. Reading the bars is one indication. Does do the bullish bars act differently and the bearish bars act differently after your timing? Like, do you get
mhm.
only a one bar counter trend as opposed to um,
Two, three,
where
four bars, yeah, or
right, right,
consolidation, right?
right. And then the other thing is, how does support and resistance act? On the way up, support holds, resistance falls. On the way down, it flips. Support starts falling and resistance starts holding. And
Hmm.
I've noticed that pattern that happens as well.
Yeah, exactly. And that's kind of our base, is that even our fuse lines, we use it that way. It's,
Hmm.
it's stronger above, weaker below. And once you have a potential square that comes into place, then you're really keen on it. You really want to watch to see how support and resistance levels are holding up. All of a sudden, the balance will shift. You
Yep.
can see how we slipped right through the first level when
Hmm.
nothing happened. 50% didn't mean anything. We slipped below, really couldn't hold above. This is a really good tell.
Yep.
When once that slipped, we would drop to the next 50% of the square.
Hmm.
And we really couldn't hold above 56.44. Struggle, struggle, struggle. We didn't go directly to 56.75, which would happen normally.
Sure.
So you're looking for signs like exactly like you said. We're looking for support, resistance, and how price action moves through that. That's really the base. And the only way, like Gann said, to learn that thoroughly is to take whatever you're trading and go back in history, get as much history as you can, put the squares up and see what happens. You really have to study each square,
Hmm.
at a time, each campaign at a time, each termination point. And once you do that, you will have enough samples in your brain, in your head, to know what kind of things to expect, and whatever market shows you next, you'll have the idea, right? You'll get the pattern.
Well,
It's
listen,
never identical, right? It's never
this is a
identical, but you'll get the. Mhm.
this is a complicated subject, and we're gonna keep revisiting it because I think it's one that can really help traders, focus on the corners that we're providing them, and then how to decipher it for themselves, what the effects of these cycles are. So, great show, Barry. I think we're getting the volatility and the movement in the markets that you and I expected in the second half, and I do
Mhm.
believe it's only going to get better. So, everybody, rest up this weekend. Next week should be another wild one, as is the rest of the
Rest
year
of the
as we
year, yep.
expected. So, rest up, and we'll talk to you next week. Great job, Barry.
Thanks, Ben. Good job, and we'll see you next week. Bye-bye.
Take care.
Bye.
Bye bye.